I just want to bring your attention to gold on the daily time frame. As you can see here, gold has been ranging, making very gradual lower lows here, but also higher highs. One could say that this is a megaphone formation, which you would normally see as reversal points at the top or the bottom of the market, but obviously gold and silver are not at those points. But one thing we can deduce is we're range bound we're at the top of the range here, and we can see that Friday closed as a bearish pin bar reversal, which is of course a clue that there are sellers in the market. We had that big tail, that big test, and we can see that there's potential for price to fall at this point. Furthermore, we've got bearish reversal divergence here on the RSI. As you can see, the RSI has made a lower high, yet price action has made a higher high, and that's a real tell that the strength felt with the buyers is less pronounced than it was certainly a week ago. So we're at the top of the range. We've got bearish reversal divergence. What else do we have? Do we have a reversal on the smaller time frame, like the hourly time frame? Let's find out on the 60 minutes. We usually use 60 minutes to basically underpin a daily sell or daily long opportunity. Okay, so we can still say that there's bullish cyclicity on the hourly time frame, and we can reasonably say that price could just simply pull back to the trend line prior to making a lower high maybe, but that doesn't really help us in the moment when we're trading our daily. Okay, because what could happen on the hourly is the fact that we could see price coming down to this trend line here and bouncing upwards and making yet another higher high, and that won't be very good if we are essentially in the trade short of our stop loss, the equivalent on the daily time frame here. So let's go back to the daily and have a look at some ideas as how we can trade this one. Okay, so what we can do, given that we've got a beautiful bearish pin bar reversal with a big tail, we can see that there's been an overlap with the previous 1, 2, 3, 4, 5, or 2 of the past 5 bars towards the top of the range here. So if you wanted a slightly more efficient entry, i.e. to potentially make more if this trade does come to fruition, a good entry point will be at the midpoint as per advanced strategy or advanced pin bar reversal strategy, with our stop loss above the high. That means that if price does retrace, and of course I am pretty certain that, like we've seen over the past few weeks, when we get a bearish pin bar reversal sell signal, we get a move in that direction followed by the opposing bar, so we get a bullish pin bar reversal following that. So sod's law, that's going to happen this time around, but the great news is if that happens, we at least won't be trapped at this point here. So typically, as per what's happened through August, is what I expect to see is next week on the daily, on Monday, we'll see a move to the downside, and then of course price will come up again and low test, come up a little bit higher, trigger us in, and then we at least have an efficient entry, even if price doesn't really go in our favor. If it does, it might take longer, but rest assured the stop loss will be at the high of the bar here. And you can see the very nature of the bar with that big test means that there really was a whiplash reaction on Friday when price dared to crawl up to it, 1,300. Okay, so the midpoint could be a very efficient point for it, and if we are triggered into this trade and the midpoint stop loss above the high means that if it does fall back down to what would have been our original entry point if we took the standard entry, we've already made 2% or whatever, however much we essentially risk per trade, or 1%. Let's have a look here. I think it's fair to say that plotting our reward to risk profile on this, we can say that even risking 1%, the reward to risk is pretty good, because if we're entering at the halfway point here, stop loss above the high, then we've got 3%, risking 1% just all the way down here. So if we extend it to that little bit more and pull this down, like so, so maybe at the bottom, we've got a 9.57 to 1 reward to risk, and times that by 2, that's like 19 potential percent if we do get the market retracing, coming back down and testing this previous low. As you can see, what's happened on 2 previous occasions, we've been making lower lows. So if we do get that entry and the market falls all the way down, then that would be fantastic. That's great reward to risk. Okay, so that concludes gold.